Welcome to the India Fintech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India. Hi everyone, and welcome back to India Fintech Diaries, the show where we discuss all things Indian fintech. I'm your co-host Elroy, and I'm joined by my co-host Hemant. How are you doing today, Hemant?
I'm doing great, Elroy. Today, we are kickstarting a new segment on WealthTech that focuses on how fintechs are helping you and me manage our money better. And to help us understand this segment, we are joined today by Mukesh Kalra, founder and CEO of ETMoney. Welcome to India Fintech Diaries, Mukesh.
Thanks a lot, Hemant and Elroy. Glad to be here.
Mukesh, you began your career as a marketeer and were even one of the first employees at India's first unicorn in the ad tech space in Mobi. Talk to us a little about yourself and what prompted you to make the shift from ad tech to fintech.
Yeah, in Mobi was the first stint into the startup world for me, and I was the first employee there after the co-founders. We actually did a great job in terms of having that journey from 0 to 1, and iterated like rapidly. Learned a lot. Probably my best years in terms of understanding what a startup is and how to actually go about building a business started there. The switch from adtech to fintech was largely, what happened was myself and Santosh, my co-founder, we started looking at financial products personally for ourselves, and over a period of time we got so involved into the whole world of financial products that we started seeing a lot of gaps, right? And there is a huge amount of mis-selling that was happening when we were starting. Like this was like 2010, 9, 10. And we said that we understand technology extent, we understand mobile to a good extent, and there seems to be a big problem that we can actually solve with our skill sets, and that's how we jumped into creating money sites, which was an early version of the fintech platform, where also in that also we actually enable users to invest in mutual funds and all that. And what we realized is that we kind of ticked off all the rookie entrepreneur mistakes, but we learned a lot in this space. We had a great product, some amount of traction. We even raised money from Bloom. Naveen had also invested. We had another angel investor, Prasad, who was also there. What we realized is that we were probably early for the market. Like our big learning from there was that you might have a great team product, but if the market power is not with you, you end up having a tough time in building the business out. So we went to Times Internet and we said that you guys have a huge base of consumers. We have a great platform. There is a possibility of a strategic partnership, and that's how Times Internet started actually liking us more. Then they said that why don't you guys come over and start building the whole financial play for us. And that's how the whole ETMoney journey actually started 5 years. So yeah, so the switch was really a session about the consumer problems that people like you and me face, and the way our financial lives are broken, right? In terms of whether it is wealth creation, whether it is your overall financial fitness, there is a lot that is broken, and we believe that combination of technology and a great experience can really solve for that. So
Interesting. That's an interesting story, Mukesh. So, Mukesh and Elroy, India is a country of savers, and that's not news that I'm telling, right? We have seen our moms putting money in rice boxes, investing in gold, and we save about 30% of the GDP. Now, but we rarely invest in, or we have just started, we invest a lot lesser in avenues like equity market. So while I think mutual funds have made some inroads because we have an asset under management of about 390 US billion dollars now, there's still a long way to go. In fact, a recent study of Jefferies found that India's mutual fund AUM as a percentage of GDP is just 12%. Even Brazil and South Africa have it at 68% and 48% respectively. So Mukesh, what do you think? What is stopping us as a country in adopting these investment products like mutual funds and investing in those?
Great question, Hemant. The way to look at the whole trend, right, is to go back, say, when in 1990s. What I understand is that consumers, or everybody chases returns as a primary reason to actually start thinking about investing, because that's why you invest. Now, in the 90s, if you notice, you can take a guess as to what was the interest rate that you could get on an FD. Just take a guess, wild guess.
I think it would be in the range of maybe 12 to 16% in the 90s, if I
Yep.
Yeah,
recall correctly.
yeah, exactly. And it was like super crazy. So at in a scenario where you're getting like 14-15% from an FD itself, you don't really need to kind of look at more options. Just a function of a guaranteed product giving you 16%. And you move to 2000s, you will start to see that real estate was doing phenomenally well. So a lot savings got diverted. Then there was gold. In the last 5 to 7 years, it's all the three avenues which have gained significantly are actually on the downtrend, right? So they are not giving you as many returns as possible. But capital markets is where the whole returns have actually kind of become huge. I think the fundamental point that I want to make is that consumer trends actually showcase that consumers, chase returns, and wherever there are higher amount of returns, people go there. Right? Sometimes I feel that it's counterintuitive that we keep on thinking that we are quite conservative as Indians. I have a view that it's not conservative; it's being about like smart about what makes more returns with lesser risk. Right? Having said that, the reason that we are still having $1 trillion in savings account and deposits, while both of them are low yielding, is largely the friction that always was there, right? To actually start investing, start participating in the capital markets. The underlying, core belief in our households and the societal fabric, which says that investing in stock markets is like gambling, right? Where it was a very prominent, social behavior that you shouldn't be. So I think a combination of two things have happened, and we are kind of excited, and that's why it's starting to move. So these were the big challenges, I think, from a huge amount of friction to start investing, and a mindset that investing in risky or a perception about capital markets to be like super risky has kept us away from capital markets for a good amount of time. In the last 5 to 7 years, as you guys know, it has been a phenomenal change in terms of how everybody's starting to look at wealth creation.
Mukesh, I think I kind of agree with you, and it's certainly getting better and the penetration getting more broad based in India.
Mhm.
In fact, if you look at the last year, right, the total assets under management from B30 cities, which are typically looked at cities outside the top 30 as identified by AMFI, grew by 86%, which is a very strong indicator that mutual funds are now being accepted outside of the bigger cities as well. Also, with ETMoney, you crossed a very important milestone of managing $3 billion on your platform. And you've also seen some of this growth be a byproduct of the pandemic times that we find ourselves in. So, talk to us about what you have seen happen in the industry during COVID and some of the key lessons you've learned.
Yeah. So I was saying that I will step back and see what has actually changed in the last 5 years, right?
Yeah,
Where consumers have actually become so much more conscious about investing. One is, I think, a huge amount of users have, the whole market has exploded, right? Today we have 700 million, online connected users, and
yeah,
everybody has a mobile. That has led to a huge amount of awareness of investment products itself, because there is this whole explosion of content as well, right? Like
yeah,
you guys are creating an amazing set of content where a segment of consumers are learning about, like with the WealthTech series, they will learn about how WealthTech operates, how to actually invest and all that. So there has been a huge catalyst in the past 5 years to create that high amount of awareness, and because of some specific focus by the industry, like mutual fund sahiye campaign and the likes, and a lot more focus by the industry to create that awareness, it has now moved to a point of having intent, right? So earlier phases to, I know that I need to invest, or I understand something of investments or mutual fund is there. It is in the last 5 years it was translated into an intent. And if you really look at the underlying reason for that intent, is huge realization that I don't want to keep my money idle in my savings account anymore. And that intent has actually kind of created this huge market out there. Now, another thing that has happened is there is a huge amount of mistrust that is there in the current service providers which were offline oriented, which are more commission based. So, for example, when a bank RM is actually calling you, you kind of you will not want to take his call or her call. It's simple because you feel that this guy will actually sell me something which is not going to be in my favor but his favor. It's just
Yeah.
that this underlying mistrust is huge, right? And access to mobile, access to internet right on my right from the phone has changed this dynamics, right? I don't need to chase the advisor or an agent to start investing. It's just starting to. And the mistrust part of it is actually accelerating again movement to go direct, right? So intent, then there is this alternate for me to actually go direct and start investing. And then the friction removal by the technology companies, right? So for ETMoney, for example, we were the first guys to actually do video KYC even before RBI came up with it. In SEBI was the
Yeah.
first. So that actually removed the whole friction of how do I start. Like you could start on ETMoney within 30 seconds. Then there is this whole external rails that are there, which is UPI, for example. And UPI constitutes a largest payment mechanism on ETMoney till today.
Interesting.
So there is this whole payment. So look at it from the perspective that there is a consumer on one end who has intent, and then there was the friction, which was the biggest challenge. That is completely getting removed, right? By coming onboarding has become super easy. Then the payment has become super easy, and then the whole industry is getting API. So for example, the whole mutual fund industry now is a large part of it is API, and it is concentrated into two big entities which are called RTAs, right, where you can directly
Yeah.
plug into them, and then you get access to like a huge amount of all the AMCs in the space in no time. And so the infra actually has started getting supremely better to remove all the frictions. And the third aspect of it has been about the product constructs and the proposition by the online players. So for example, on ETMoney you can come invest in mutual funds without any commission and without any transaction cost. So it has removed the friction for me to start investing. It has actually removed biasness that the platform could ever have by not having commission, and it actually helps you save up to or earn up to 1% higher returns just by being on the platform, right? So I think the product construct and the innovations that have been there around the whole product has all of these things over a period of time have come together, and that's why you see that all the vectors are getting aligned, and that's why there is a huge impact in terms of how consumers are now so much thinking about really moving their money from savings account to capital market. Now coming to the whole point of pandemic, right? What happened? What ETMoney, on the ETMoney platform we started seeing is three things happen in the pandemic. One is people have a certain segment that ETMoney actually focuses on, which is more salaried individuals, started having a lot of time at hand, right? Because the commuting is gone,
Yeah.
then you're not traveling out, you're not going out too on a weekend also, right? So there is this huge amount of time that is available. That was one. Second is a lot of consumers move from cities to their hometowns, living with their families, and there was a lot of savings because and the savings was also because there was no spend outside, right? So
Yeah.
and the third thing that happened is a good segment of consumers on ETMoney also started, we did a dipstick in within our group of consumers, and there was this very interesting insight that came out. People actually started looking at their life with a very different lens during pandemic. One of it was that hey, I am I don't know, because pandemic came in, and because of COVID they started seeing complete change, right? Like people close by, people were actually kind of also affected by it negatively and all that. and everybody started questioning their current way of working, living life, right? So that was a big change. That there is a high amount of self realization. Hey, am I doing like the right thing right now? Because this is everything is so uncertain. And like you guys actually started fintech diaries during pandemic because you had a downtime and you started thinking that what else we could do right differently than
Yeah.
your regular job. And that self realization, the moment you want to chart on a new course in your life when it comes to professional life, the first question that comes to mind is, do I have enough money, right, to take a shot at something new, take a shot at something that I want to do? And suddenly, there was time, there was savings, and there was this self realization that which made money as a center stage. So that all these three things have come together and really blasted the whole movement of or the intent of the users to actually start investing. In our learning, that's where you see like a huge amount of participation in the wealth or capital markets coming from across India.
Hmm.
So I think there was this whole turbo engine that was there for WealthTech during this pandemic.
Mukesh, absolutely great points. There were three trends, as you highlighted, which were already there. One was a massive amount of efforts from the overall industry itself to increase the financial literacy in the market. The second was due to the financial infra getting built up and other innovations, the friction reducing by a large amount. And third was products that were generating more value for the consumers. And all this further got accelerated, as you rightly said, when the COVID came in and torpedoed the growth, which was already there, but it just increased multifold, which has completely transformed the industry of wealth tech. So, Mukesh, let's spend a little time on ET Money now, Mukesh. So, I know ET Money started by providing a lower cost direct mutual funds on the platform, but today ET Money is a lot more than that, right? So, how would you best describe the platform today, and what are the key products, and what's the philosophy behind introducing them?
Yeah, we have a very strong focus on consumer behavior data. And so what we started seeing was mutual fund had this huge traction because of no commission and the innovations that we baked in, right, as first part of our journey. And if you really look at it from a industry perspective, also the first phase of innovations is all about helping consumers get on board faster, right, with least amount of friction. So video KYC, getting consumers to actually invest in SIPs, which are instant, which are Aadhaar based, which are UPI based. So can we actually start help consumers to start even with like a small amount of 500 rupees SIP? Can we actually get consumers to get their money back into their account instantly? Like instant redemption was one
Right.
another innovation we did, right? So I think the first phase of our journey on ETMoney was to really simplify all this, combined with the huge advantage of you not paying for commissions or for transactions. So that actually was a growth engine and continues to be a growth engine till now. What we started seeing was that consumers started to wanted to actually start looking at more longer term tax efficient products. So we brought in NPS, where we are now the largest online player in the space in terms of getting new users into the NPS national pension system, where you actually save a lot on taxes first, and it's for long term, and it's really geared towards for your retirement. During the pandemic, we then looked at people being more uncertain and not taking much risk as the initial phase of the first wave came in. So we introduced FT. So we worked with the best player in the space, highest amount of interest rate, and that actually became a big growth engine for us for the coming 9 to 12 months. So I think it's been a journey which has been more guided by how our consumers are evolving in their wealth creation journeys. What are their needs, and we keep on focusing on using technology to bring it in a unique manner to them. And other aspects of so protection became important as we started seeing, but there were a lot of insights around, should we be doing like just getting insurance products onto the platform. So our approach has not been really like becoming a marketplace, but is more focused around the needs of the consumers across their financial life. We're very sharply focused on wealth, but we started experimenting certain things around insurance and lending, and there were insights which led to that. So first insight, it's funny actually. First insight was that when we started asking our consumer base, which is largely a millennial consumer base, when we started asking them about insurance, everybody said that hey, I'm not gonna die anytime soon, so I don't need insurance. But it's my parents which I'm worried about and want them getting protected. So it's like it's funny because in a way the only certain thing is actually death.
Yeah.
But the mindset of the consumer when the consumer is young, in the range of 25 to 30 years, you feel that you are invincible.
Okay, so quick question. Did that mindset change after COVID, or is that something you've seen persist?
No, it is definitely changed after COVID. There is more awareness. We are seeing more insurance from even health and term life being bought by individuals themselves. So that has definitely changed. I'm talking about how our journey actually evolved, and
Yeah,
we
yeah,
actually started creating more segmented solutions for niche
understood.
use cases, right?
Yeah,
And that's how we have been experimenting on insurance, and similarly on lending we have started seeing a lot of consumers not having balances at the end of the month. So the first three weeks of the month there is a lot of splurge, and this was happening like two times in a year. We said that can we plug that problem for our consumers, and then we actually created something called as line of credit solution with RBL as a loan pass. So these have been experiments on ETMoney which are completely guided by how the consumers are actually evolving on the platform, and what are those big you know needs that we could capture. And that's how the state of ETMoney as of today is. And now we have been kind of really sharply focusing on wealth, because we see that's the biggest growth area for ETMoney, and that is accelerated. As you said, we at any point in time, $3 billion, which is 22,500 crores gets of investments, and that too only mutual fund investments. I'm not talking stocks
yeah.
and other, gets managed on the platform. It's grown like 11x in the last 2 years, 2.5 years. So I think we are seeing a much more focused uh, growth out there, and we'll continue to actually sharply focus on wealth creation journeys for our consumers for the next 2 years.
I mean, there's some pretty interesting insights, Mukesh, on the overall consumer behavior part of it, as well as how you built out ET Money. I'm just curious, from what I've seen, at least as far as WealthTech is concerned, right? I've seen two broad schools of thought emerge, how other firms have approached WealthTech, InvestTech globally. So if you look at the West, one predominant approach is to build out very targeted specific products. So for example, Acorns that looks at micro investing, or something like an Robinhood that only looks at digital brokerage and so on, right? Or a robo advisory firm and so on. And if you look at the East, the approach is pretty different, where the entire approach is more based on building a super app or a super store. And that largely tries to do everything that a consumer could possibly want under one roof. And this is what you'd see guys like Ant Financial, Ping An actually kind of pioneer. So, from your experience in building ET Money in India, which of these models you think would actually start resonating more as time progresses, from an Indian context?
Great question, Elroy. I think our learning has been that when the markets are not deep,
Right?
then this focusing on niches
Yeah.
actually leads to smaller slivers being created, right? Like there is not huge market out there when you have only one niche focus, because the market is not deep. So what
Correct.
happens in US, the markets are very deep. The consumers are, penetration of every product, whether it is investments or even lending or insurance, is quite deep. So you could actually then break out the whole opportunity into one slice and say that I will just do broking. That's it. I will just
Yeah.
disrupt that aspect, and there could be a $50 billion outcome out there, right? Because of the markets being deep. It's only recently that the Indian markets are getting deeper. So it's like the first wave of penetration getting better. And that's why, and the same, and compared to East, it's been the same problem, right? You have not deep markets, so people go and build out horizontal stuff. So you have more use cases covered across the journey than actually having a very niche focus around one aspect of the play.
Yeah.
And now, and I think in India, it's only recently that the markets are getting deeper. So there is a huge upside for all the kind of players, whether it is a niche play in wealth tech
Yeah.
or it is a horizontal play in wealth tech. So that is those both the options are actually getting opened up simultaneously, which is very unique for India because you have a lot of ground to cover in terms of penetration,
Yeah.
but the market is so huge with like a 700 million users, or if I slice it down to say that there are still 300 million savings accounts in the country, right, and only 25 to 30 million investment accounts. So there is this whole combination that can actually kind of open up. So it can be a mix of both the west and east that you were talking about in India,
Yeah.
which is unique to India itself. That's our take right now, that there's this huge opportunity. That so for example, ETMoney is really not gone into stockbroking.
Yeah.
And there the our insight was that for a retail consumer, it's not the probably the best option. If we just make the platform easy, there could be a problem in terms of people not knowing what to do with it and ending up making wrong choices, right? So that
Yep.
was our reason, that it's a small market for retail consumers, great market for traders.
Which is actually one of the points of dissatisfaction, critical points that people have in the West about Robinhood.
Mhm.
That it makes investing so simple that most people don't realize the risk they're taking by just clicking on buy.
Yes, yes, yes. So I think so that was one core aspect of it, that can we ensure that people are participating in capital markets but are able to do it more responsibly, or
Yeah.
and that was one big reason for us. And then we saw that retail consumers are not as big, like the whole buy and hold, you just invest in a stock and forget, for example,
Yeah.
versus trading, right? So trading is like 94% of the market. So the idea is that can we actually kind of, because the market is so huge, can we create our own focused audience led approach towards wealth tech,
Yeah.
than looking at a business first approach that I want to be into brokerage, but hey, what problem does it solve? You look at all the companies which are in the space are exactly the same. And it's funny that all the brokerage in the country are actually having exactly the same back end service providers. So there is no real innovation out there, frankly.
Understood.
Now when everything in the back is by one or two platforms, which is Omnisys, and they have this ready-made products where you plug into the exchanges and start a broking service, right? So the other reason for us has been that what is the innovation that we can bring into the market, and which also is guided by our audience focus. That's one thing that we have been looking at. And I believe that there is an opportunity to have a combination of a strong so to say recommendation engine with a way for you to also invest, right? So right, like recommendation plus transact. Today everything is transaction oriented, right? So I think that's one space that can evolve very rapidly in the wealth tech space, from a overall approach perspective. So there are like we can keep on talking about so many
Yeah.
aspects that are there around it. But our journey has been like really focused on a very core audience, and we felt that without a unique or a very differentiated product, getting into areas is a lot of energy that gets burnt without much upside.
Got it. Got it. Mukesh, if I listen to the entire discussion that we have had till now, a key focus clearly which is visible is that the approach of being not product centric but consumer centric. So let's understand a little bit of this audience or consumer that you are talking about. Can you help us understand who is a typical customer or the user that you're focusing on, and how has it changed, if it has changed over a period of last many years?
Yeah, from our audience focus perspective, we are very sharply focused on consumers who have an income of at least 50,000 a month to as high as 2 lakh rupees a month. And that's a wide range of income bracket, but from a age perspective it has been 26 to 35. Like it becomes very nuanced because 26 to 35 is a very different bracket, but essentially we actually zeroed it on that consumers who have just started earning are not the ones that we go after, because the focus is not about savings, it's more about you know spending, because this is the first 2 years, you when you get your salaries, you don't want to you want to splurge because that's the first time that you've got money on your own, and that's been the read that we have had. So so largely that's the audience, and then the stage of life, which is from being a bachelor to first kid. And if you really look at it, that's where the seriousness about money comes into. So when you're hitting the age of 26, 27 is where the marriage is coming closer, or car is coming closer, or or a house, for example, is from a lot of insights that we've got comes. So so people start to become serious about money at that stage, and hence our platform becomes very highly relevant to that audience suddenly. So that has been the sharp focus, and from an audience perspective, in terms of how this audience has evolved, is a very interesting story. So our read has been that in the earlier version, like probably in my age, right, there was this whole fixed mindset about our goals in life, right? Like
Yeah.
you actually get into a college, get a job, get married, have a house, and have kids, and you kind of work till like 60 and kind of retire, like, and then figure out, like, that's been a very fixed mindset into it,
Yeah.
right? Like
The
that's the
typical
way.
Indian middle class dream.
Yes, right. But now what we're seeing is that this fixed mindset is actually completely getting evolved into saying that I don't want a lot of ownership. I don't want to have a house. I probably don't want to have a car also, because Uber takes care of it. Marriages are also becoming very differently looked at than it being a very strong, uh, you know, early commitment in life. Right? Retirement is like people are thinking about retirement in a different manner and say that I want to retire early. My goals in life are very different from having a fixed mindset about joining a company and doing a job. Right? Why can't I start on my own? So I think there is this whole change in the consumer mindset about how they view their financial life, or how they view their life, and how then money helps them get there, instead of money being like a disjointed aspect of your life. It is becoming more closer, and saying that, can money help me achieve those goals, right? It's like that. So I think there's a huge amount of change in how the consumers are starting to look at goals, and the role of money to actually lead me to those goals, and those goals themselves are evolving in nature. So I think that's the psychographic change that we are seeing very
Yeah.
clearly in the audience, and that's why we are not kind of moving, or ever will ever have a kind of a very traditional high end financial plan, right?
Yeah.
That which is very preachy in nature, which actually tries to fix you into like slots, and then kind of has that focused way of, or fixed mindset kind of approach towards this. So the way ET money itself is evolving is to respond to those needs of the individual, more, what do I say, in a more agile manner than having a
Yeah.
very fixed view towards things. So for example, people actually want a lot more control, which is counterintuitive to earlier world, right? That
Yeah.
we just want to get rid of the money, park it somewhere, so that I don't have to kind of move into, or. But today, people want to kind of get involved also more. Like people are coming to ETMoney app on a daily basis. our MAU to DAO ratio is like phenomenally high, right?
Mm.
Where, for example, in mutual funds, you don't have much to actually kind of do in that sense, apart from investing and redeeming.
Yeah.
But people are more involved about in the money. So how do we actually create products which help them uh, also get involved and have a ownership in the decisions, right? Is how the whole ETMoney platform is also
Mm.
evolving, and how the consumers are also evolving.
Mukesh, that actually gets me to the next question, right? When you mentioned about the platform, I'm sure that there will be a fair amount of technology challenges that you face while building this out, especially that when ETMoney started, I doubt there would have been a lot of standardization in industry to begin with, right? So, talk to us about some of those challenges and your learnings from them as well.
Sure, great question actually. So the early part, 2016, it was really a step level problem, right? So how do we
Yeah,
get the consumers start investing? Like we had this focus on helping consumers to start investing within 1 minute. So that was the theme for the first year for everything that we do at ETM.
interesting. Yeah,
And because we were the first mobile players in the space, like everybody during that time was on to desktop web and were porting to mobile.
correct.
So the traditional players and everybody was actually just porting their whole thing, that getting into but because we were mobile first, we could think of solutions or friction removal in a very unique manner. So video KYC came to us because it's a mobile first solution. Like you could actually take a selfie.
Yeah.
Now, a company which is very desktop focused will not think about a selfie being there, right, as a way to solve for the problem.
Also, the other thing is as far as KYC is concerned, right? At that point of time, you also had centralized KYC, which is why a lot of people would not have paid a lot of attention to the entire KYC journey and tried to piggyback off existing investors who already invested somewhere.
Yes, yes, and yeah, that's also a good point, because then it was already kind of focus only on those guys which who are already KYC, so not to.
Precisely.
And but our focus has been to expand the market. So we, as a combination, it actually helped us create that
Yeah.
video KYC solution. The other challenge was to actually kind of get the consumers into the mode of, or actually kind of, as I said, the product construct itself, right?
Yeah.
Like the whole instant redemption API, for example, the challenge was that we just questioned that why the hell I can't get my own money which is invested in a mutual fund instantly.
Correct. Instantly.
Why it has to be like a 24-hour for liquid funds, and then 48 hours to 72 hours for a equity mutual fund. So we started questioning those, and then said that, okay, what is the solution? Is there a technology solution? So we worked with the industry, created an instant redemption API, and it was possible. It's just that nobody was looking at it from a tech point of view, that we could actually create an API for instant redemption for liquid funds. So I think those challenges were always there, I feel, but nobody looked at it from a angle of solving it with tech. The third challenge was, as you rightly pointed out, is the industry not evolved? So 95% of the industry was offline.
Yeah.
So that was one challenge, that everything, the even the mutual fund companies looked at from the perspective of an offline, agent or an advisor.
Right.
And then the evolution actually started to happen, and I think those are the first level of challenges, and it has been a challenge in terms of removing the frictions for getting more and more consumers onboarded, right? The first phase of any industry evolution that happens, and now it has come to obviously a much more bigger you state where a lot of things are getting API.
Very interesting points, Mukesh. I also remember one of the tweets that you recently put out where you said that the secrets to being able to deliver scaled results at ET Money with just one fifth the capital was mainly about how you use data analytics. So, could you also let us know a little bit about how you're using data analytics today and some of the results that has gotten for you?
Yeah, that's been one of the most exciting phase of the journey. The way the whole data analytics thing actually started while we were small, and a lot
Yeah.
of time data analytics becomes more of a sexy thing to do than actually yielding business results. It's just
And
difficult to
many
actually
times it just devolves to standard MIs, nothing beyond that.
yeah. Yeah, and and I think what happened was we had this product where you could actually start to see the whole of your spend pattern via, because we actually understand your SMS streams if you give us a
Yeah.
permission, right? So we could create an amazing history of your spends, or a graph of your spends, where you're spending, how much you're spending, by which card, by in which category. So there's this huge amount of data collection that was happening, and that continues to happen today also. Like at any given day, we are having close to 100 to 150 GB of a user's transactional data that gets kind of processed on a daily
Yeah.
basis. And this data is not really social data, for example, right, which is not as useful when it comes to money. It's actually a
Yeah.
transactional data stream, so it is very rich in its obviously it is all basis the permissions that the user give, only then it starts, otherwise it doesn't, right? So we had this, we suddenly started seeing that there's this huge amount of data that is giving an end utility to the consumer to know where their money is going. Then we started seeing a huge amount of data in terms of behavior of the user while they're investing. So what is the AUMs? How where are they investing? Is it large cap, mid
Mm.
cap, small cap? Gave us an idea of a risk score, right, as to how
Yeah.
consumers are, right? Then we said that, okay, can we actually give more utility and also help us understand our consumers better through data? That's where we launched credit score. That became another source of data for us for understanding the consumers. Now what happened was that, how do we start using this data to really give back more value to the consumers, is how the journey of the whole data stack or data analytics stack started. So when you, for example, the way it gets used today is when you start your journey on ETMoney,
Yeah.
the whole home screen is now personalized one to one.
Mm.
So if Hemant comes tomorrow, we'll have a different feed which is completely personalized to Hemant as an individual based on the data that we have. If Elroy comes day after, your feed or that you see on the home screen of ETMoney is one to one personalized. So what are the chances that Elroy will actually be interested in a mid cap fund, for example, right?
Right.
So we started getting to the point that it helped us predict some of the aspects of our consumers' behavior across the journey of the product. So what is the next engaging product that our user would be likely to purchase, or is there a right time for us to nudge that user into a cushion of debt funds because he's already taking a lot of risk.
Yeah.
So so that actually journey has been a phenomenal journey around data, and the impact has been phenomenal. So so one part was on ensuring that consumer who are actually starting their journey, for example, in mutual funds, how many of them actually have also engaged with us on or bought NPS, right, or
Mm.
bought FD. With this understanding and the algorithms that we have run in the back, we have been able to grow this by close to 1.8x on
Mm.
how the purchase for other products happens. And that actually feeds into, A, it solves for a consumer need and problem, and B, it locks the consumer into the ETMoney ecosystem, right? Like NPS is a 15-year product,
Yeah.
right? So I think that was one big impact that we could see. And that actually had a second order impact of we being able to actually recoup our variable cost as well
Mm.
through other products of insurance and lending. I think we came to a point of starting to understand users had a clean business impact out there. Then we said that, okay, this stack is amazing. Can we add delivery to it? Like, can we? So for example, we know Elroy really well
Mm.
in terms of the risk, in terms of the spend graph, in terms of credit score. That problem was solved. That we know that we have the information, but how does this data help us convert more consumers who are coming onto the app?
Yeah.
So we started doing in-house lookalike modeling. That a
Mm.
consumer who is coming with this kind of data set is more likely to convert better than a consumer who's not. Then we evolved it into a model of which is basis the RFM. Like, so we now have a
Yeah.
segmented approach to the whole thing, which has actually impacted our convergence in an amazing manner. For example, a user who comes on ETMoney signs up, right?
Hmm.
And the first transaction happens. That conversion is to the tune of 17 to 18% right
Right.
now. And that has grown from close to 7 to 8% in
That's
the
pretty
last two
nice.
years.
Pretty phenomenal, in fact.
And that 19% is not about consumers making a one-off purchase, right? Which is not very involved. The user has come in, installed the app, signed up,
Hmm.
did the KYC, selected a product,
Hmm.
opened the investment account, and then made a successful payment. I'm talking about that conversion end to end. So from a sign up to a transacting user is a long journey, right? And
Yep.
that's why I put it out that with like probably one fifth the money of capital that we have invested in marketing, we are able to convert like or have the metrics which keep us in the top 2 3 position in the space. And so very clear benefits of, so it has been a journey. Like, we did not kind of know that it will start to impact like this, the whole data analytics piece, right? So we actually added delivery to it, that how do we intercept the user at the right time with, whether it's a WhatsApp, it's a notification email, or a in-app nudge, right?
Yep.
So we added delivery to that stack, and suddenly the power became much more multiplied, right? So a lot of consumers might not get a notification, but a lot of consumers actually get upgraded on the app itself, right? So it becomes very different. And all of this, the beauty is that we have so many products, but we have to keep the experience to be tight, right? Because otherwise, what
Yep.
happens is, if you actually kind of don't have this kind of stack or in place, you'll keep bombarding, right?
Right.
And when you keep bombarding, everything that you bombard apart from your core product, right, becomes a blind spot, right? I come from
Yeah.
ad tech, so I know that ad blindness and all that actually is, you know.
Yeah, because there's some
So,
amount
so
of fatigue also when you keep getting the same messages to
yes,
invest in something you're clearly
yes,
not interested
yes.
in.
And the third and the second more deeper impact is you lose customers.
Yeah.
So how do you make the balance that you have an array of products which are seamlessly integrated into the journey of the user across your behavior, across the app, and then also have like business impact on it. And now we are taking it to the next level of this
Hmm.
understanding, is to really create personalized products.
Interesting,
So
Mukesh.
so we are now, it is leading into actually we creating, like in Jan Feb, you will start to see hyper personalized investment products coming from ETMoney. So it's been an amazing journey on the data analytics piece, and it's crazy that it's only a 3-member team.
That's actually pretty phenomenal to do this with just a three-member team. Because I've seen cases where firms have employed, let's say, 3 to 10 times the amount and still not gotten results anywhere close to what you're getting.
Yeah, it's been, I think, those guys have been crazy in terms of their intensity of actually going after the problem. So pretty, we lucked out there.
Mukesh, I think this also kind of explains to a large extent how ET Money today is a practical juggernaut, right? You have like $65 million coming in fresh investments every month, which is growing at 20% monthly. You have 70% organic user growth, and a significant portion, about 30 million of that, is just in SIPs monthly, which is just recurring amounts that are invested on your platform. But in your own words, you say that you're only 1% done today. So what does that other 99% look like? What's the future roadmap that you see for ET Money, and where do you see the industry headed as well?
Why we keep on saying that it's 1% is the sheer amount of impact that we could create.
Yeah,
For example, we are just touching few million users today, right? In that,
right,
and there are like, I think we can really focus on touching 100 million users in the next 5 years and have a huge positive impact into their financial life. And when I say positive impact, it's not very kind of a philosophical thing. We've drilled it down.
Hmm.
Like, when a user is making a profit in terms of investment, is an is a positive outcome we have created for the user. So,
Right.
so that's how we kind of look at the whole thing. Like, it's very counterintuitive to the industry, because nobody wants you to move money out, right? Because
Yeah.
That's how the industry operates. And because we don't take commissions, we are not married to you having an AUM with us, right? Or
Yeah.
you know, so I think anything a huge focus to ensure that we are touching 100 million users in the next 5 years and positively impacting uh, is what our focus is. And that's why I say that we are just 1% done in that sense. Where the industry is headed, I think to an extent, solving for the transaction piece or onboarding piece, it's just a 6 month more kind of battle.
Okay.
Everything is going to get it's commoditized, right? So we were the pioneers earlier. Then everybody actually kind of has the same solution now in the back, right? In terms of
Yeah.
onboarding, KYC is pretty much the same. All the product constructs are more or less getting. So I think it has been a step problem, right? In a transaction phase of the industry, like you're just solving for getting more and more users onboarded in the industry.
Yeah.
That friction, I think, is almost done. The industry will now have to actually evolve to really helping consumers decide which financial product to buy, which investment to make. For example, today still there are 3,000 mutual funds, 36 categories.
Hmm.
I can start investing very easily, but which mutual fund I should be investing in? Not an easy answer yet to be yet completely solved. Right?
And I guess the reclassification of mutual funds also didn't help a lot in this.
Yeah, it did not, and that's why we created like something called as a report card of mutual
Yeah.
fund, which makes it like you can read it in English that what are the good, bad, ugly about a fund, and then you can take a very clear decision. The second aspect, that's the pre-transaction journey, right? As to
Yeah.
how do you help consumers decide the right financial products. And the second part is what happens after the transaction. See, financial products are not products which are one-off purchases, right? You are actually kind of having a long-term relationship with them. So what happens? So, for example, if you have 5 mutual funds and 6 stocks,
Hmm.
and the market has changed, what you should be doing with it? There's no answer to it. Nobody is solving for that.
Not just that, also what if your risk profile and the way you look at your own goals
Exactly.
has changed?
Yes, I was coming exactly to that.
Yeah.
That your whole risk profile and the appetite to take risk has changed. What do you do? What do you do when you have more money? Should you be actually investing? If you want more money, where you should be, redeeming from it,
Investing. Yeah.
where you should be. So I think there's this whole array of problems which are getting bigger and bigger and deeper, and they will only become bigger next year and next year and next year, with for a very simple reason.
Hmm.
Huge amount of user base have come in. The number of products that have been launched in the market, and different types of products, so whether it's mutual fund stocks, fixed income products of deposits, or NCDs, or or InvITs, or real estate, products that are coming on. So people are lapping up to everything right now. So what is happening is a huge amount of products per person are going to be massive.
Hmm.
That increases the complexity to take a decision or to do any action multifold, right?
Yeah.
So this problem of is a very big problem that will come up, and we are excited about figuring out a way to solve these problems. So really kind of looking at building for that future thing in the next 6 to 9 months.
Mukesh, it's been a pleasure conversing with you. Really enjoyed today's conversation. In case any of our listeners wanted to know more about ETMoney or contact you, what's the best way to do that?
I think people can reach out to me on Twitter, pretty much active, and we do have once you install the app, we do have support and a lot of help out there to help you start your journey. So I think
Excellent, Mukesh. We will include those details in the show notes. And thanks a ton, Mukesh, for taking out time and speaking to us.
no, it's been a pleasure. You guys have figured out a way to actually get so much out of the conversation. It's amazing.
Thanks, Mukesh. That's it from India FinTech Diaries for this week. Do log on to our website, indiafintechdiaries.com, for exclusive content. And until next time, stay safe.